Order, and we're continuing our meeting with officials on the Budget Implementation Act, Bill C-97, and I'm not sure whether you were done your presentation or not, Ms. Tupchinka. Do you have anything more to add? If not, we'll go to questions on Part 4, Division Section 1, which is the Subdivision A Bank of Canada Act. Was there anything more you want to add? Okay. I know there's some that are here, weren't here yesterday, but we had went through the presentation from the group before us. So we're open to questions. Anybody? Mr. Savara.
Thank you, Mr. Chair. And before we were stopped yesterday, in reference to the changes that will impact credit unions in Canada, these will only apply to federally regulated credit unions, correct?
That is correct.
Okay, and that will allow them, as the chair of the All-Party Credit Union Caucus, the benefits to them, it will not be as cumbersome to reach out to their shareholders, if I'm not mistaken.
That is correct as well.
Okay, so there should be some cost savings for the credit unions. The two federally, I think there's two federally regulated credit unions, correct?
There are two federally regulated credit unions, Coast Capital Savings and Uni Cooperative Financière. And indeed, the proposed changes or the changes that are being proposed will increase optionality with respect to voting, and will allow the federal credit unions who have transitioned from the provincial regimes to continue to use some of the methods that they used under provincial regimes. So yes, indeed, cost savings.
Okay. Thank you, Chair.
Mr. Fergus.
Just quickly, out of those two federal credit unions, how many of their votes are presently done by proxy?
The federal credit unions do not vote by proxies. They have a different regime. So most of the members would be either voting in person or voting in advance. That is one option that members have, given that the proxy system is not available.
So then, would these changes, do you feel, would increase or decrease the participation by their members?
Federal credit unions have indicated that it would increase participation of members, and they see these changes as beneficial to, I guess, improvement of the democratic process at general meetings.
Perfect. Thank you.
Any questions from anyone else? Okay. Thank you very much. That deals with subdivision B. Then on Part 4, Section 1. Subdivision B, rather, this time. Ms. Trapani and Mr. Gibson. Floor is yours.
Thank you, Chair. I'm Judy Trapani. I'm the Director of Payments Policy at the Department of Finance, and I'm joined by William Gibson, who's in Canamis and the Payments team as well. The Canadian Payments Act prescribes Payments Canada's mandate, membership, and governance framework. Part 4, Subdivision 1B makes technical amendments to the Canadian Payments Act in order to first allow elected directors to be elected for 2 additional 3-year terms from the present 1 additional term, extend the term of the chair and the deputy chair of the board from 2 to 3 years, and add an overall limit of 6 years, et permettre la rémunération des membres du comité.
To allow for the payment of the executive, subject to administration. Some of the consumer groups have constraints which could prevent their having greater participation. These technical amendments were announced in the budget and are subject to legislative review on the Payments Act, concluded by the government in February 2019.
Mr. Dussault.
You say that consumers' representatives will then be paid? Is that what you're saying? Remunerated? Thank you for that question. The proposed change will allow the remuneration of these representatives of consumer groups. How much in terms of remuneration? Would this be a full-time job? Or will it be symbolic in nature?
just a few hours per month or per year even. The details will be set out in the regulations. The advisory committees meet 3 or 4 times a year based on their participation. So it won't be a full-time job then. What concerns me is that these are representatives representing the interests of consumers, and perhaps these people won't have an expertise of a number of years. As I indicated, the details will be set out in the regulations, but the goal is to allow these groups to do this. Is this an obstacle not to be remunerated? The consumer groups representatives are represented on the executive committee, but this is some of the comments that we received. Thank you.
Durant vos consultations,
During your consultations with the sector, did they express difficulty attracting people to be members of their boards? I'd just like to know why we've extended the terms of these members. Thank you for that question. In fact, the reason that we've added an additional 3-year term is that it's very complex system. It could take some time to gain the necessary expertise, and having an additional term be possible will allow the acquired expertise to benefit others. So expertise is difficult, yes.
Questions? All in, all done? Bob, you're quiet? Thank you very much. We'll go to Part 4, Division 2. Thank you again. And subdivision, we'll start with Subdivision A, Canada Business Corporations Act. I think there's several subdivisions here. If everyone wants to come to the table, there's probably room. You're welcome to it, and then we don't have to shuffle chairs each time. Mr. Shan, I believe you're likely the one giving the presentation. We have Mr. Shan, Director General, Mr. Wright, Director Financial Crimes Governances, and Mr. Patterson, Director Corporate Insolvency and Competition Policy Director. The floor is yours.
Merci, Monsieur le Président.
Thank you, Chair.
Changes that we're discussing are related to the Canada Business Corporations Act. They follow on from changes that were part of Budget 2018 related to beneficial ownership transparency. In Budget 2018, we introduced changes to the Canada Business Corporations Act to require corporations to hold information related to beneficial ownership, and those who exercised significant control over privately held corporations registered under the Canada Business Corporations Act. That was part of a broad federal, provincial, territorial agreement that was reached by ministers of finance in 2017 with a commitment from all jurisdictions to be able to proceed with the same arrangements within their own corporate statutes. The change that we're introducing here is a further clarification of the rules that we set out in those amendments, which is just related to who can access that initial information. In particular, the changes specify that an investigative body would be able to access these records upon request, notably that those investigative bodies in question are police tax authorities and any investigative body added by regulation, so we've left ourselves some flexibility in future. And the investigating body can make a request if it has reasonable grounds to suspect that the information would be relevant to an investigation of one of the offenses set out in the schedule. And at least one of the requested corporation itself, CBCA corporation sharing, an investor of significant control with the requested corporation, or another entity over which one of the requested corporations, investor of significant control, has investor of significant control, like control. It establishes penalties for non-compliance, and it also sets out some safeguards for the usage and request of that register of significant control, notably that an investigative body must file an annual report to the Director of Corporations Canada on aggregate use of the request power, and it also sets out that investigative bodies must keep records when they use the request power.
Okay, it's open to discussion, and the Finance Committee did do a study on Money Laundering Terrorism Financing Act. Mr. Fergus.
Effectivement, Monsieur le Président, c'est pour cette raison.
Yes, Mr. Speaker, that's the reason why I would like to ask the following question. Mr. Shun, do you believe that the $5,000 fine is a sufficient incentive for private companies to keep their information confidential? Thank you for that question. There are two aspects to the penalty included in this bill. The $5,000 is only for administrative errors. That is an error by a company that fails to comply with the details set out in the bill. There is another penalty that is set out in the bill. This is a penalty or a fine of $200,000 and the possibility of up to 6 months in prison for failing to comply with the bill.
Types of penalties. Administrative penalties for an organization that simply makes an administrative error in their registry of beneficial owners, or failure to do so in an administrative manner. And then the second type of penalty, which is a clear contravention of the spirit of the law, which is when you knew of information related to a beneficial owner that you failed to include, and that can be up to $200,000 and up to 6 months in prison. So we do think that balance is right in terms of administrative burden for the vast majority of these private corporations that are small and medium-sized enterprises, but also the significant stick of a significant fine and prison time for those who are bad actors using corporate shells.
For those bad actors, and thank you for making that distinction. For those bad actors, is it up to $200,000 and up to 6 months prison time per error, or is it in general for being a bad actor? Like, if I'm trying to put it to you this way: if someone is purposely trying to falsify information, they're laundering money and they're extending that. I'm trying to figure out what the extent of the is that a max, or is there some discretion that's involved there for the
so the courts and the Public Prosecution Service would be those who would interpret the penalty scheme, but it's essentially intentional non-compliance. And so if they were able to articulate before the court that they felt that there was intentional non-compliance of multiple counts of intentional non-compliance, so each entry or other factors, the courts may be in a position to adjudicate that there's actually warrant for multiple penalties of a similar offense.
Thank you.
Merci.
Oui, merci.
Thank you. And I thank you for following the report of the committee on this subject. Perhaps it's somewhat under the expectations of the committee, but it's in the right direction. My question concerns the registry by investigative bodies. Doesn't say how long the information or the registry will have to be kept for each request and the results of the request. Yes, this is necessary for investigative bodies to have a report every year. In the first bill, in the 2018 budget bill, there is an indication that the registry should be maintained every year. as well as to develop this registry with all the changes made.
Corporations will have to maintain their registry of significant control, including any changes that are brought to their attention, and that's on a go-forward basis. In terms of the investigative bodies, they'll have to file annually as to the amount of records that they've requested, and in terms of how long they would keep them for, that would be subject to the particular laws that they're subject to on information management. Et dans ce contexte, il y a normalement
And in this context, if there is an ongoing investigation, then of course the agencies, the investigative agencies or bodies would have to maintain that document. You mentioned that there was significant participation. I think we can talk about 25% participation in a company, 25%. And my question is, why did you settle on that amount as a significant participation? Because I think this is quite high. For people with bad intentions, they could easily get around that 25% rule. There's two major aspects to your question. The first is that there are two parts to the definition. First is the percentage of shares that can be held by one person or one body. That's 25%. But also in the bill, there is a definition of who controls a company with less than 25%.
We've got both aspects. There's also an important linkage to other aspects of our total kind of approach to money laundering, terrorist financing, and proceeds of crime, in that enterprises already under FINTRAC regulations, when they utilize a Canadian financial institution, are required to deposit with their financial institution any beneficial ownership information related to the exact same percentage. And so we see this as sort of boots and suspenders, in that it also provides ease for the corporation, in that the same requirements that they're subject to for banking purposes are the same requirements that they're subject to for corporations. And we think that parallel actually builds a strong system.
Okay. Puis sur la question de...
With regard to the registry held by investigative bodies, is the goal of that measure to have a centralized registry for companies under federal jurisdiction or federally registered companies, and for companies registered in the provinces and territories as well? That is, to have a centralized registry for all. My personal idea would be to make it public, not fully, obviously, but at least there would be a centralized registry. Thank you for that question. This project goes beyond the bill. The plan to improve the transparency in terms of the profits of companies includes all provinces and territories in Canada, and now there is an agreement with everyone to do this work. That's the first phase. The first phase also includes the need for each company to maintain its records and documents, and investigative bodies must be able to have access.
This project is to work with the provinces and territories to identify how we want to move forward with further access, recognizing that in the world of money laundering, terrorist financing, and tax evasion, you need a coherent system across all of the corporate registries, because if you only do one, then everyone just re-registers in a potential other jurisdiction. And so the second phase of this is to work with the provinces and territories to identify how we would like to be able to share this information, and what makes the most practical sense in terms of who should have access and how we should store it. So for right now, it's corporations have to hold it, and competent authorities can access it when there's a suspicion and a linkage to an investigation. And then the second phase is who else and where should it be stored.
Merci.
Merci.
That it, Pierre? Mr. Fergus?
Mr. Sean, you've appeared before this committee several times, and for the first time, I can actually say you made a mistake. It's belts and suspenders, not boots and suspenders. It's a redundancy.
Thank you, Mr. Fergus.
You're very welcome. But seriously, just following up on the comments from Mr. Dussault, what, in regards to the 25% significant ownership a threshold which we've established, could you talk to some of the other thresholds that other jurisdictions are doing? And I'm thinking in particular of what the UK and what the EU are offering.
I'm trying to remember. Daryl will look that up. I know that in the world of publicly traded corporations, it's a 10% threshold, because of the feeling in there is that the transparency of the ownership when it's a share of a publicly traded corporation is of a different order, in part because the transparency isn't so much necessarily about money laundering or crime, but about who potentially has access to the proxy and who can control decision making. And then in the UK and the EU, it's 25. Well, there we go. Ian knows it.
Yeah, sort of within the general world and within the the FATA, Financial Action Task Force discussions, it's generally 25% is the number that's tossed around, although it is used. There are variances that go on. And I think that's seen as an appropriate balance between burden placed upon reporting entities and individuals to be able to report in versus the ability to actually control a company. So the ability to get collusion within 5, 6, 8, 10 individuals is much less of a risk than when you only have to get 2 or 3 or 4 people joined. Although that is to say that I think it's a number that there's going to be further discussion on. There's a lot of discussion going on internationally and with our colleagues in other countries on what appropriate thresholds are as the threats and the risks begin to grow and to mount.
And the one thing I would just add is that we did do quite a bit of international scanning as we developed this project, and the one piece that I think there's a number of improvements that we've made, and it more relates to the 2018 changes rather than these, but it was around that the registry itself needs to include the natural person at the end of the chain for the beneficial owner. So we learned from the UK model of their requirement only to list the next entity, which meant that you'd end up having to follow this chain of a series of numbered corporations to finally get to the ultimate owner, whereas we've asked corporations to go as far down the chain as they can.
Mr. Chair, through you, I'd appreciate perhaps if Mr. Wright and Mr. Sean, if you guys could send back to the committee just the latest scan on terms of what are the international standards from the UK and the EU in particular. It was my understanding that, if not now, soon, that they were going to move to a lower threshold than 25%.
Happy to do so.
Okay, if you can gather that. You mentioned there was, in your opening remarks, that there's safeguards for the usage. Can you outline the key 3 of those? Because there is some fear on access out there. I know we heard that during our hearings.
Yeah, so one was the types of offenses that potentially investigative bodies would be able to secure these records for. And so the schedule of offenses is essentially that which has a tie towards money laundering, proceeds of crime, and terrorist financing. And so it's not... and the second threshold is that there needs to be a reasonable nexus between the information and the investigative body. So it's not it can't be a fishing expedition. And then the third was this duty to report. So that the director, the investigative bodies have to file an aggregate to the Director of Corporations Canada, so that there can be some transparency to how often is this power being used and who's it being used by.
Okay, I see no other questions. Then Mr. Dussault, sorry.
Juste très rapidement, juste
Quickly, if I may, since you mentioned earlier that for a company to go find the identity of a physical individual, and perhaps a series of companies, each of one owns another, to go back to investigate the company under investigation. If the information is not exact or accurate, and the company has done everything it could to get the information, but perhaps they made a mistake or didn't get to the end result, because the person involved is not cooperating in the disclosure of the identity. To what extent can we do anything? How does the Act address this issue? Because criminals probably won't cooperate to reveal the identity at the end of the chain, the individual. Yes, that's a good question, and it's a question that has been subject to great deal of discussion around this bill. First of all, it's important to indicate that that's why there are two types of penalties, because it's not the fault of the companies if they make every effort to conduct an investigation of who controls a company's shares. The second part, or important aspect, is that this is just one tool.
We've tried to do across the overall approach to money laundering, terrorist financing, is to create a set of tools that can collaborate between each other. So between tax authorities and investigative bodies and additional resources that have been placed there. You're right. We can't place too much burden on the corporation because their full-time job is not to investigate ultimately who may be shareholders in their enterprise. Their full-time job is to run their company, and so this is one more tool for competent authorities, amongst other things like tax filing and tax investigations, and financial authorities as well. And we hope that it's an additional. One more kind of aspect of the overall effort, recognizing it has limitations, but we think that it can be made up for in other zones.
Okay. Thank you. Then on subdivision A, then turning to strengthening anti-money laundering and anti-terrorism financing, subsection B. And I'm not sure who's leading off. Is it you, Mr. St. Denis? Paul St. Denis, Senior Counsel, Criminal Law Policy, addition to the table, Mr. Trudell. If I can find you on here. Director General, Specialized Service Sector, and Ms. Trotman, Director, Financial Crimes. Okay, floor is yours.
Thank you, Mr. Chairman. The proposal contained in the bill is a very simple one. What we're proposing to do is amend the offense of money laundering by adding an additional mental element of recklessness. This would mean then that this modified offense would have three potential mental elements as alternatives: one of knowing, one of believing, or one of being reckless as to the origins of the property that may be proceeds of crime. And we believe that with this amendment, it will be easier for prosecutors to prosecute certain types of money laundering offenses.
Okay. Any questions on this section? Mr. Fergus.
Ma question, monsieur. Merci beaucoup, monsieur Saint.
Thank you, Mr. St. Denis. My question to you and your team is this. Are there other international examples where recklessness is part of the criteria? And if so, what are the results in that respect? I know that in Australia at the federal level, money laundering contains recklessness. With regard to the success of that offense, I do not have the results to tell you. We know that in Australia, money laundering cases will be prosecuted, but we don't know whether it will be based with the use of this element of recklessness or knowledge or belief.
Peut-être la question.
Perhaps the question I should have asked is this. in other jurisdictions, what are the cases where they are successful? Is there a case where they've had cases that we don't have? Money laundering is extremely difficult to prove as an offense. First, you have to prove that the individual knew that the proceeds that they're dealing with come from as the result of an offense, from the commission of an offense. Perhaps there is no country that has great success with this offense. In Canada, we have two possibilities when we believe that an individual has been involved in the commission of an indictable offense. Possession of goods that come from the commission of a crime, and we charge an individual with two charges, the possession and the laundering. And when it comes time to prosecute, normally the prosecution drops the money laundering charge to deal specifically with possession, which is easier to prove. And the penalty is in fact the same. And the maximum is 10 years in prison for both crimes, both offenses. And the Crown will therefore drop money laundering charge. It's a more complex charge, and they will move forward instead with possession. But to respond more directly to your question, I don't believe that there is a specific country that we can point to where we can say that they have great success with prosecuting money laundering crimes. The reason I'm asking the question is because during our study last year, Canada, according to the report, had, well, I don't want to say that we are the worst, but we are not the best. For example, I think there are examples of other countries where we can take inspiration from them, and that was the basis for recommendations. We must recognize that we have a system of common law, first of all, and that a number of the countries, members of the GAFI, are civil law countries, and the civil law approach for prosecution is extremely different. I 100% agree, and that's why we have to focus our efforts on the US and the UK, which use this common law approach. When we talk about FINTRAC, and it came to assess anti-money laundering and anti-terrorism measures, one of the things that we had discussions about concerned the distinction between possession, prosecution, and money laundering prosecution. This group is concerned mainly with money laundering and terrorism financing. So when we've demonstrated that we are prosecuting a connected charge of possession, it's not as interesting because it's not a money laundering charge. Often we're talking about very similar offenses. And since the Crown prosecutes these charges, they will pick the path that is the least difficult in order to get the same result. So therefore, they often prefer to pursue the charge of possession. But for this group, it's not ideal because we've been penalized, in my opinion, because we don't pick the ideal, that is, to pursue the money laundering charge. That said, we must recognize that money laundering offense is a very complex offense, and it requires expertise on the part of the investigators, a very advanced expertise in terms of money. It's very costly. And in recent years, given the reorganization that took place at the RCMP and the reorganization of staffing at the RCMP, no doubt you have heard that when the committee examined, during your study rather, that the RCMP looked a lot at national security and investigations on money laundering suffered. And there were fewer because there were fewer investigators who were available. So all this has meant that this group has encouraged us to consider pursuing these charges.
Want it in? Go ahead.
Yeah, it's just maybe add a little bit to that. You know, this change to the criminal code is, we feel, unnecessary, but it's not necessarily sufficient for us to address the broader issues that we have with prosecuting and trying to enforce ML and TF. So Budget 19, we had quite, an extensive suite of other activities and other funding that we're bringing forward. There's the ACE team, there's this trade-based money laundering center that's being created, funding provided to the RCMP to support the federal policing, funding provided to FinTrack. So I think we should look at this as one part of a broader effort by the government to strengthen overall, and hopefully that will then lead to, stronger enforcement, stronger prosecutions, investigations, and such.
Mr. Fergus? Is that it?
Fine for the moment. Thank you.
Okay, and any other witnesses who want to come in at any time, just raise your hand and I'll catch you. Mr. Dussault.
Merci. Je sais pas.
Thank you. I think it's a step in the right direction, obviously, but I'm not convinced that this will allow us to catch people who launder money on a professional basis. There's even a chain of people who succeed each other. As we talked about earlier, there's a series of people, and then ultimately the final person is the money launderer, the real one. And they're well protected. There are walls everywhere to protect themselves. Even people aren't allowed to know what's happening, what others are doing with regard to the proceeds. So obviously we'll have to address this issue. And it's easy to protect yourself from charges, even if we add this issue of recklessness. What you have observed is a fair observation. It's true that in the case of professional money launderers, these people are 4 or 5 degrees removed from the offense that takes place. So we recognize this. By adding the issue of recklessness, we believe that in some cases this will help, even when it comes to professional money launderers. But you are correct that this will not resolve the issue. In some cases, however, we believe that this will help cases where we cannot at present prosecute successfully. We hope this will be an additional tool. But there is no answer. There is not a single legislative change or amendment that will resolve the issue involving professional money launderers. It will remain a problem. Well, we'll have to find a solution nonetheless. This is the challenge. If there was one single solution, I think we would have already implemented it, of course. Thank you.
Thank you. Thank you both. Thank you all. Then turning to Subdivision C, Proceeds of Crime, Money Laundering, Terrorism Financing Act. Who is any new additional? Is it Ms. Trotman? Go ahead.
Thank you, Chair. I will be dealing with amendments relating to the Proceeds of Crime, Money Laundering and Terrorist Financing Act, or the PCML-TFA. The first set of proposed amendments would add the Competition Bureau and Revenu Québec as disclosure recipients of the Financial Transactions and Reports Analysis Centre of Canada Intelligence, or FINTRAC. This is intended to support the investigation of tax evasion and mass marketing fraud. The second set of amendments modify the timing and the discretion of the Director of FINTRAC to make public certain information related to an administrative monetary policy. These amendments will also clarify the information for which confidentiality orders could be issued in an administrative monetary policy penalty litigation, which would exclude the identity of the reporting entity, the nature of the violations, and the amount of the penalty imposed. And finally, there are technical amendments which clarify terminology and improve readability of the text. Thank you.
Okay, anyone have any questions here? Just to start on the mass marketing fraud, can you expand on what that is?
Sure. So the Competition Bureau has a central role in the fight against deceptive marketing practices and mass marketing fraud, which can include communication via traditional mail, telephone, or email. And the Competition Bureau included them as disclosure recipients in this proposed amendments to the legislation because they do have a large intelligence gathering function.
Is that also via the internet, via phone calls?
That's correct.
Okay. Any other questions? Mr. Dussault.
Est-ce que ça vient régler le fameux problème des pénalités administratives pécuniaires qui avait été soulevé par rapport à un processus plutôt, je pense même j'ai pas l'information. J'ai pas l'information avec moi en ce moment, mais je sais qu'il y avait une cour même qui avait.
Just hold on, Pierre. There's no translation. A minute. Not getting English.
Is this working now? This should work now. So it concerns the infamous problem of administrative penalties that was raised by a court, if I remember correctly. And this was assessed as being too vague, too subjective. And has this problem then been resolved? Thank you for that question. I'll answer in English.
Intended to remove the discretion of the Director of FINTRAC, so it would make the naming automatic when an administrative penalty has been either issued or following an appeal process. The entity would be named automatically.
Donc ça, c'est juste pour le fait de nommer.
So that's just for naming the entity, but does this resolve the issue with the fact that the discretion of the director was too vague and too broad? Sometimes there was a penalty imposed and didn't know how the amount was reached.
Of the proposed amendments would allow for, so if there was an ongoing court proceeding and the courts had issued a confidentiality order, we would still be able, FINTRAC would still be able to name the entity, the amount of the penalty, and what it was for.
Okay.
But I would also add that, so outside of this, though, FINTRAC is revamping the AMP process, and they are working on issues around ensuring greater visibility and transparency within how fines are determined and how the process works. But that's separate from this. This is just a procedure about talking about the naming process. But FINTRAC is working quite actively to address the issues raised by the court in the proceedings that you're referring to.
Okay, fait que c'est pas encore réglé.
So it's not yet resolved. That's just part of the solution.
Anyone else on this section? Good. All right. Thank you. Then on subsection C, subsection D, Seized Property Management Act.
Merci, Monsieur le Président.
Yeah.
Je vais décrire.
Thank you, Mr. Speaker. We'll talk about the bill as it, or the act as it is, and then how it has changed with the amendment.
Responsible for administering seized property that's been seized pursuant to federal criminal charges only. There are specific charges for which the act is eligible. So these are specific charges under the Criminal Code, under the Control of Drugs and Substances Act, and the Proceeds of Crime, Money Laundering, Terrorism Financing Act. So very specific charges for which we are able to serve. And this would be upon issuance of a management order by a judge. The current legislation and the limits that it has prohibit serving cases such as the fraud case that was described pursuant to your question, Mr. Chair. In order to, and these criminal cases, I think, also are not static. So they may start out as a federal criminal charge. As the prosecution proceeds and investigations proceed, what began as an expected federal criminal charge may conclude ultimately in some other outcome, acquittal, a lesser charge, a plea bargain, etc. The inability to provide services beyond the current scope of the Act has some challenges associated with it. Firstly, if we're unable to serve law enforcement as a service provider for the management of these assets, law enforcement is required to manage the assets themselves. So if they are laying charges beyond or haven't laid charges yet, these assets remain with law enforcement to do. That means they spend law enforcement resources managing assets. Certainly the uncertainty of outcome from the outset of an investigation through to the end can prohibit the confiscation or seizure of assets or suspect assets. And then lastly, as a challenge that puts some inefficiency in that we've got multiple levels of organizations, provincial, municipal, federal, all maintaining the capacity to deal with seized assets. The changes to the Act would allow my organization to serve any federal public official, provincial public official, or municipal public official. We would be able to serve any offense, so a specific violation of any provincial or federal law, where assets that are connected to an offense, or where assets are believed to be intended for the commission of an offense. So a much broader ability to support. And will be managed to authorized to manage and dispose of those assets and provide advice to client organizations. It would require the consent of provinces, so provinces and territories and municipalities would choose to use our service. It's not imposed; it's available to them if they so choose. Our minister or his representatives would be required to agree to provide the service. So it's a mutual agreement between the two of us. And they would also need to agree to share the net proceeds. So if the outcome is that a seized asset is forfeited to the Crown, is sold or liquidated, and costs are recovered, that's how the program is paid for under the current Act and how it would be continued to be paid for after the proposed amendments. And the proceeds of sale, the net proceeds of sale, are shared with the jurisdictions who participated in the law enforcement action. That's also part of the existing regime. So really it represents a broadening of who we can offer services to and in what contexts, but the core function remains as it is today.
Okay, in terms of proceeds from sale of assets now, is that shared now?
Yes.
It is shared now. And based on an agreement with the
Correct.
provinces or whatever.
In the current regulations, which aren't affected by these amendments, the current regulations specify the sharing methods both within Canada and abroad with foreign jurisdictions that participate in a prosecution.
And could you give me an example of what an asset that would need management would be? Would it be a yacht? Would it be a whatever?
So there's pretty much anything you can imagine. So there's two general categories of assets. The assets that are used in the commission of an offense. These are offense-related property, so a vehicle used to smuggle, a property used for a clandestine lab, etc. And then the proceeds of crime themselves, so the cash, the fancy cars, the luxury properties that folks would buy. They also include things like businesses that can be used to launder money. Prior to conviction, these assets, although seized, remain the property of the accused, and so they need to be maintained. A business may need to continue to be run.
a luxury vehicle may need to be preserved in the state in which it was seized, and even a residence may continue to be occupied by the accused while the process unfolds, and that can take years.
Okay, anybody, any other question? Mr. Fergus, or if any other witnesses that say have anything you want to add, just put up your hand. We'll catch you. Mr. Fergus.
Juste une simple question, Monsieur Trudeau.
Just a question, Mr. Trudel, a simple one. Under the provisions, is this at the request of the provinces and territories, and the federal government is helping them to deal with or dispose of these assets? Yes, there's a very active dialogue between my program and my provincial counterparts and municipal counterparts. We've already had agreements over the past 5 years to help each other. The memorandum of understanding that have been signed among a number of provinces, either to manage a specific case or for general rules, how to operate, in other words. It's quite dynamic when it comes to a criminal asset. So could be at a federal level, and then ultimately the final result might be unexpected, and the asset might be confiscated by another authority. So we have an operational need to act, and the support that we're proposing aligns with the cooperation that we already see between municipal, provincial, and federal police forces, where they also work very closely together to adopt best practices in this area. Thank you.
No other questions, or is there any on A, B, C, D on this section in total, part 2? None?
Well, if I guess I could go back a couple of back to C then, since you're opening that door.
Well, it all interrelates. Either ask them now or we'll never get them answered.
Well, I guess I was just trying to figure out how we are taking into account, of course, just the advent of cyber money.
Bitcoin?
Bitcoins and what's the abstracted term for it? Cryptocurrencies. And how are we dealing with that, and crypto wallets and the like?
Thank you for the question. So we're actually currently following the previous parliamentary review of the PCML TFA at the regulatory stage, and we're currently developing...
2013, sorry?
2012, yeah, that's correct. We're currently in the process of the second phase of regulatory amendments, and so we're developing regulations related to virtual currencies, which include things like Bitcoin, et cetera. I guess it was June of last year, of 2018, that we had gone out with the pre-pub version and are trying to finalize before the end of session regulations in that respect.
Now, there are other colleagues around the table who are more adept at understanding cryptocurrencies and the whole aspect of it than I am. So forgive me if I'm out of my league on this one, but it just seems that if we are catching up to the last report in 2013, in 2018, my sense was from a lot of the testimonies around from the... Sorry, you weren't there, but Pierre-Luc and Tom was there, or Dan was there, and Francesco. I'm just trying to figure out, there was a lot of demands for us to really try to get ahead of the game because the market has evolved enormously since...
So currently the Financial Action Task Force, which is the international standard-setting body in the space of financial crimes, so money laundering and counterproliferation, terrorist financing, is in the process of developing guidance around what they call virtual assets, we call virtual currencies. Our legislation is largely compliant with the direction that they're moving in. However, we're coming out in advance of the agreement on that standard internationally. So we are slightly ahead of other jurisdictions in that respect.
Very good. Thank you.
Wanted in.
Just to carry on the question, we've already seen some confiscation of virtual currencies. I think we're dealing with our first case. And part of the benefits of the amendments that we're proposing to do is to be able to lend the expertise to other jurisdictions within Canada. You can imagine a small municipality or provincial detachment that comes across a virtual currency confiscation may not have the capacity to know exactly how to handle it technically. That's something we've worked with the RCMP and in contact with colleagues internationally on how to figure out how best to do. Knowing that in some instances, the real owner is invisible, not necessarily in Canada. You can't necessarily lay a criminal charge within Canada. And so the amendments that we propose here, the expertise we've got, changing with the other changes that are proposed, help us to get after these kind of more complex assets that are used by more sophisticated operators.
No more questions? All right. Thank you very much, all those folks who come forward on part 2. Turning to part 4, division 3, Employment Equity Act. Okay, Division 3, Employment Equity Act.
Good afternoon.
Good afternoon. Who's leading off? You, Ms. Segler?
Yes.
And Sharman, you'll have to pronounce your last name for me.
Chowdhury.
Chowdhury, okay. Welcome. Floor is yours.
Great, thank you. So we're here today because we're seeking an adjustment to the reporting requirements outlined under the Employment Equity Act in order to implement pay transparency for the federally regulated private sector. It's a technical amendment to Section 18.1 of the Act to allow us to collect the collection of a specific annual wage data from federally regulated private sector employers that is currently authorized through the legislation. This amendment supports the introduction of pay transparency measures announced in Budget 2018. As amended, this provision will require employers to report salary information beyond salary ranges as prescribed by regulations to make wage gap information by occupational groups more evident.
That one's short and concise. Mr. Kamish.
So what kind of information are you looking to get exactly?
We'll be collecting, currently we collect annualized salary. So instead now what we're doing is asking for components of the salary that allow us to calculate an hourly wage gap. In addition, we'll be collecting bonus information and overtime information.
Would that also include benefits for like total compensation calculations?
No, it doesn't include the
so
benefits.
It won't be benefits, say, the other half of the pension contribution, or it won't include things like health benefits, it won't include things like dental,
no,
extra vacation days.
No, we won't be including any of that. What we're looking at is trying to boil down to the hourly wage rate and then compare those male against female as well as against the other 3 designated groups within the Employment Equity Act.
But it says any other information. So is there anything beyond that you could ask an employer for?
We could, but we would have to go back and change our regulations yet again. But yes, potentially in the future. However, what we're doing is we're modeling on some work that's been done in the UK, as well as what's happening in other parts of the world. And so we're starting with this first piece.
This salary information, when it's collected, is it also adjusted for, because as salary ranges of employees, there's the basic and then the additions. Do you collect the seniority of the person?
The way that we collect the data under the Employment Equity Act is actually collected against what we call employment equity occupational groups. And so we've basically broken the workforce down into 14 strata. So you do know senior managers, clerical staff. So again, it's 14 different groups within that. So yes, so what we're envisioning is that we will be able to look at the highest and lowest within the 4 quartiles for each of those occupational groups.
And so federally regulated organizations, that would be like railways, airlines, banks, would be required to comply with this.
Correct.
Did you consult with anybody with that before on adding these couple of lines here? Was anybody consulted?
Absolutely. We've been out consulting throughout the process. We just completed 7 in-person consultations. We invited 2,200, participants. We had approximately 260 that attended those. Then we went out with a further online consultation. Using the findings of our in-person, we amended a few changes after what we heard, and we sent those out, and that just wrapped up at the end of March.
Okay, and that consultation included, I hope, the Privacy and Information Commissioner?
We work with the privacy group always throughout this process. However, what we're doing is not changing. It's changing the way we collect the information, but we already collect the salary information from these employers. So it's really just changing it. So we have worked with privacy in the past. And we continue to do so.
You work with privacy. So the
Yes.
Commissioner's office.
Yes.
Okay,
Yes.
just to make sure.
Yeah.
And did you also consult with CPHR, so Chartered Professionals in Human Resources, with their associations?
We did put out a call. Our consultation, our online consultation was open to everyone. I'm just looking to you, Charmin. I know we did have some input from some of the human resources groups. I'm not sure if that group was specifically provided input.
Could you get back to the committee maybe after,
Certainly.
if they were in fact?
Yeah.
'Cause I'm thinking if this was an accounting change, we would have consulted, I'm assuming, with the CPA. I would hope that we would do the same thing with the HR professionals who are responsible for keeping track of salary information for their employers.
Absolutely. And again, when we went out and did our consultations, that that is the group that we reach out to for the most part. We do reach to the CEOs as well of the employers, but also into the HR groups.
Okay, thank you.
Chaudhary, did you want to add anything? You were okay. Any further questions over here? Mr. Dussault.
I see.
Thank you. If I understand, what you're asking today is the regulatory authority to go and get some more information with regard to the different types of information that you use. So when can we expect these regulations that will be published and pre-published?
We're working on the regulations now. As to when they will be pre-published, that'll all depend on Treasury Board dates, as you can appreciate. But we are in the drafting room now and hope to move these forward as soon as possible.
Mr. Dussault?
Oui,
Okay. Just
soon
could
as
you,
possible.
in addition to the information you're providing to the committee through the clerk for Mr. Commish, could you also outline the 14 strata that you're doing this analysis on? Hearing no further questions, then thank you both very, very much, and we'll go to Part 4, Division 4. Climate action support. So I know there's several sections under this. If all the witnesses want to come forward at the same time, that's fine. We'll deal with them section by section. There's climate action support, there's payment in relation to infrastructure, there's the Federation of Canadian Municipalities section, and there's the Shock Trauma Air Rescue Service. We'll bring them all up to the table. We'll go through them one by one, but we'll have the whole crew here, Michael. And one should never make assumptions. Is it Miss Meltzer that's leading? Who's leading off on the climate action support? Mr. Miller. So we've Mr. Miller, Director General Corporate Finance, Natural Resources with Finance Canada. Mr. Fleming, Executive Director Implementation, and Ms. Meltzer, Director General Environmental Protection Branch with the ECCC. Go ahead, Mr. Miller.
Merci, le Président.
Thank you, Chair.
Here to speak initially to Clause 129 of the bill, and this is a proposed provision which is entitled Climate Action Support. The provision would enable the Minister of Finance to specify another federal minister, such as the Minister of Indigenous Services, who would then be able to requisition payments from the Consolidated Revenue Fund for payments to be made for purposes and in locations to be specified by the Minister of Finance. The purpose of this provision is to allow for the return of a portion of the fuel charge collected in certain provinces that do not meet the federal standard for carbon pollution pricing. And just as additional context for the committee, I draw your attention to the Governor General and Council's decision on March 26th of this year to amend Schedule 1, Part 1 of the Greenhouse Gas Pollution Pricing Act, and to list 4 provinces in that schedule: Ontario, Manitoba, Saskatchewan, and New Brunswick, which entered into force on April 1st of this year and applied the fuel charge in those provinces. So as of April 1st, proceeds of that fuel charge will begin to be collected by the federal government, and this provision that is proposed in the BIA would allow for a portion of those to be returned, as I mentioned, in a manner specified by the Minister of Finance. I should note that the proposed provision puts a cap on the amount that could be requisitioned, and the cap is there's a bit of a complicated formula that's outlined in the bill, but in simple terms, it caps the amount based on the total proceeds collected by the fuel charge, less any amounts that are rebated to provinces or individuals, including through the Income Tax Act. The Climate Action Incentive returns to individuals, individual residents of those provinces is the principal mechanism for rebating portions of those funds. I would also draw, just by way of context, the committee's attention to the government's announcement in October in terms of its intent for how payments will be made pursuant to the provision if approved by Parliament. And the intent of the government is to use the payments to support sectors of the economy that can be expected to incur additional expenses related to carbon pricing. So those would be small and medium enterprises, municipalities, universities, hospitals, schools, colleges, not-for-profit organizations, and Indigenous communities. The budget plan does not specify particular amounts. Those amounts would be booked at the time when funds were requisitioned. So that's just to explain further why the budget is silent on that, but it does include an indication of the government's intent to bring forward this legislative amendment in Annex 3 of the budget plan. I guess I'll conclude there, Mr. Chair.
Okay, Mr. Polyev.
Thank you, Mr. Miller. You mentioned there was a cap, but I missed to what does that cap apply?
Well, the cap, and it's laid out in subsection 4 of the clause, which would be a maximum. And
maximum for what?
The maximum for the amount that could be requisitioned pursuant to the authorities here.
And can you define requisitioned?
I think requisition. I'm not a lawyer, but it's a legal term that relates to the authority to draw funds from the Consolidated Revenue Fund.
So, to draw funds for the purposes of the rebate?
For the purposes of making these payments.
Which payments?
The payments that are defined in this section.
Could you just give some examples, though, for the record of what kind of payments might come out of this?
Right. Well, that's not specifically defined here. What is defined here is that the Minister of Finance would have the ability to set terms and conditions for the nature of the payments. But I would point to the October announcement of the government's intent to provide payments to the target sectors of the economy that I listed a moment ago. And the payments could be in relation to supporting those entities to increase the efficiency of their operations in order, for example, to further reduce greenhouse gas emissions.
And there is a cap on, there is a ceiling but not a floor in this bill for this money. Do I have that right? Because you mentioned there's a cap, but you didn't mention that there was a floor. Cap holds things down, floor holds things up. Right. Is there a minimum amount the minister must expend, or just a maximum?
Only a maximum. The maximum, again, I draw your attention to subsection 4, which includes a somewhat complicated algebraic formula. But in plain language terms, the maximum is set by the amount of the proceeds from the fuel charge. Subtracted from that is any rebates the government provides related to those proceeds through other means, such as the climate action incentive to individual taxpayers.
And is the rebate formula in law or subject to discretion of the minister?
The rebate formula for the formula that I just mentioned?
The formula by which the rebates are determined. Are they? I know the minister is authorized to provide rebates to people in backstop provinces, but does the law require it?
So if I understand your question, Mr. Poilievre, you're asking really about provisions of the Income Tax Act and of the Greenhouse Gas Pollution Pricing Act. I'm not familiar with those. Perhaps my colleague, Ms. Meltzer.
To come in at any time, just to raise your hand.
We could also
Ms. Meltzer.
undertake to provide exactly the reference in those two pieces of legislation. If
that would be great. Yes.
Yeah, and I can confirm that under the Greenhouse Gas Pollution Pricing Act, there is a requirement to return all direct proceeds from the application of the federal system to the jurisdiction of origin.
But does the share of that return dedicated to rebates, is it defined in statute?
To the best of my knowledge, it's not defined in the Greenhouse Gas Pollution Pricing Act. It talks about the proceeds, the direct proceeds from the application of the federal system. But as my colleague mentioned, we can certainly follow up to confirm.
So the question then I'm asking for you to return an answer is the following: is the rebate to residents in backstop provinces defined in statute? Or subject to government discretion?
So you can get back to us on that through the clerk as quickly as possible.
Do you have a rough time frame to get back to me on that?
That can be done very quickly.
Today or?
Today.
Excellent. Thank you, Mr. Miller. Thank you, Madam Belzer.
Is that it for now, Pierre?
That's all for me.
Mr. Savera.
Mr. Chair, just a quick question, something I'd like to put on the record. Are any of you aware or have read the PBO report that came out on pricing of pollution?
Yes, I'm aware of it.
And the PBO report did indicate that more monies or funds would be returned to Canadians in the 4 provinces that would be collected by the government. Is that not correct?
That's correct. That was my understanding of the report. That's right.
Okay. Thank you. Stop right there,
We're going
Mr. Chair.
to stick to the legislation if we could. and not get into the parameters around it. Mr. Dussault.
Could I just
Yes,
ask a
Mr.
question
Chair.
as well?
Can we go to Mr. Dussault and then come back? Mr. Dussault.
Merci, Monsieur le Président.
Thank you, Chair. Thank you. To the witness, my main question is to know how the calculation is done to estimate what is mentioned in the bill. You estimated the charges collected, and that is how you're going to base the transfer payments that go to each province on, who don't pay sufficient carbon tax, according to the federal government. So what is the calculation and how are you going to estimate it to do the transfers? Thank you for that question.
À ce moment,
At present, these estimates have not been completed. The bill gives the authority to do those estimates, those exact estimates. I would add that according to the formula in the bill, the estimates for a specific period will be adjusted and they will be specific in the future to ensure that the maximum, the threshold, is higher than reality. So for the first year, you have an estimate, but then in subsequent years, it'll be more specific. And if at the end of a year, you determine that the estimates weren't correct, you will adjust the amounts. That is the effect of a subsection 4 with E. Is this estimate being done in collaboration with the province that is impacted or totally independently of the provinces, solely by the federal government, and the provinces will have to accept the calculation? I have already mentioned the 4 provinces currently listed in the legislation. These provinces don't have a direct role in this calculation. Is there no mechanism that could create a calculation if it's not exact?
Est-ce que ça pourrait...
Could it? Do you think it might not be useful to do this?
That's more up to the government to decide.
But we are considering maybe amending this bill.
So it's not done. As I understand the answer, it's not done. There's not an independent calculation other than the federal government's, right? And the province is not involved. And if you want to make an amendment along those lines, that's your choice. But I don't know how the officials can answer that question. It's not there at the moment.
Okay.
Anything else, Mr. Dussault? Mr. Poilievre.
I will pass. I think Mr. Kamiuk wants to speak.
Oh, okay. Mr. Kamish, sorry.
So just on the formula, so the B portion of it, it's E minus F minus G minus H. But, and tell me if I'm wrong, but my interpretation of this is under G, because it's deducting from that if the Minister of Finance approves another minister to requisition money out of this amount for something else, a portion of it, that would be deducted from the totals that may be distributed to residents of that province. That's what G is.
yeah. So thank you for the question. It is, I agree, somewhat complicated to read it in real time. But in simple terms, B, which is comprised of that somewhat complicated formula that you pointed to, of which G is a portion, is the best way of thinking of it, I think, is as a true up. So there's an estimate in 1 year, of the amount of the proceeds that will be collected from the fuel charge. And that estimate is revised based on the subsequent year's actual amounts. And G, just to speak to that for a moment, is the amount that has actually been paid out of the Consolidated Revenue Fund pursuant to the authority.
Sorry. Algebra was never a strong point of mine. And I was told that carbon tax was simple and easy, and now I see algebra. But I'm good at balance sheets. But tell me if I'm wrong on this scenario then. Okay. The Minister of Finance could then define, say, two ministers, Minister of Environment and Climate Change and, say, Minister of Infrastructure, that they may dip into the fund if they want to use this money for projects. And he could set out a bunch of criteria for it. Correct. And then those ministers could come to the fund and say, we have a project or we have a program that we want to do that specified province. They could then requisition money that would be minus G. And so that carbon rebate that would be going to residents, that would be diminished in that following income tax year. Am I reading that correctly? So Minister of Finance could determine rules for taking out this money that should be rebated to residents and said will go to government spending. I am good at algebra.
So maybe I could just walk through the whole formula. That might be the best way of
I'm worried about that.
Good job. E minus F minus G minus H. Yep, that'd be a good job.
Would that be a fair way of?
Well, I prefer if you answer the scenario if it's possible to do that.
Just a little concerned. I didn't fully understand all the subtlety of the scenario.
There's no subtlety there.
Yeah. So, just to walk through briefly the formula, which admittedly, as I've said, is a touch complicated. C is really the amount that's estimated to be collected from the fuel charge. Right. D is the amount that is estimated to be paid to individuals and potentially others under the Income Tax Act. So you're basically making sure that any payments are taken into account before this amount, the maximum is set. When you get to B, and there's four components of B, that's really looking at previous periods that have occurred to making sure that there's a true up in that period for previous periods. And so that's why you're looking at again the amounts that have been collected from the fuel charge in E, the amounts that have been paid out to individuals and potentially others in relation to the rebates, and then looking at the payments, the actual payments that have been made, which is G, pursuant to this authority. And finally, there's a true up in relation to kind of a lag effect related to entities' relationship with the Canada Revenue Agency is really the purpose of H.
Back to the algebra example. So am I correct then to assume that if the Minister of Finance under subsection 5, which is G, creates conditions under which two other ministers or another minister can take money out for a program or for infrastructure spending, it would deduct from the total that could be redistributed in this under H and other provisions to residents of a province?
That's correct.
That's correct. Okay.
Okay. Any further discussion in this area? All right. Now, if I could find my paper in this mess, then we'll turn. No other questions on climate action support. Okay. Turning then to Mr. Dussault.
Juste rapidement, je sais qu'on.
Quickly, I know that we want to move on, but with regard to the cost that this represents to small and medium-sized business and business in general, small and medium-sized businesses in particular, was that amount calculated? Because here we're talking about amounts for taxpayers in the 4 provinces where it was people were able to set out in their income tax return whether they wanted to claim that amount. Can small and medium-sized businesses expect that this will be done in a similar fashion with the Income Tax Act, or will it be done here in this type of payment assistance to small and to business? Thank you for that question. I will answer in English. And just to give you some context.
In terms of the return of proceeds, as was announced publicly in the fall, is that 90% of the proceeds from the fuel charge in those specified jurisdictions, so Manitoba, Saskatchewan, New Brunswick, Ontario, go back to households through climate action incentive payments. It was also signaled that about 10% of those direct proceeds from the fuel charge would be returned to other affected sectors, and that included small and medium enterprise. It included what we call the MUSH sector, municipalities, universities, schools, hospitals, Indigenous organizations, and nonprofit sector, et cetera. At that time, when that was indicated on October 23rd, Finance Canada, and I'll defer to the details for them, they published the estimated proceeds and the return that would go back to those sectors. So there are estimates by jurisdiction, by year in the public domain, and we can certainly forward you the links if that would be helpful. The details of the direct proceeds that are returned, those approximate 10% to those other affected sectors, are still being developed. So we don't have specific details on that at this time, but that's sort of the overall scenario. But the numbers in terms of estimated amounts going to small and medium enterprises is available in the public domain.
Okay. En plus,
Also, during the announcement on October 2018, about 2/3 of the 10% of the revenues for programming will go to SMEs and 1/3 to the other affected sectors. So that's the approximate figures that were set out in the announcement. And this will be done through this mechanism, this payment to the provinces of this 10%.
Okay, thank you. And you still want back in, Mr. Polyev?
Yes.
Okay.
The disbursement of these funds to organizations and individuals affected by the carbon tax. On that subject, is there any guarantee that small businesses will get as much back in benefits from these expenditures as they pay in higher prices through the carbon tax?
Thanks for that question. So the details of that, how that 10%, the details of how it will be dispersed, and including to small and medium enterprise, is still to be determined. I think just in terms of the expectation of how the approach works, the expectation is that, so 2 things I would say with respect to small and medium enterprise. One is the expectation that many, if not most, would pass any additional costs incurred through to the consumer, and hence there's the rationale for returning, the significant portion of the direct proceeds to households who will, for the most part, get more back than the costs they incurred. But the other thing that is available to small and medium enterprise is also the potential ability to opt into the output-based pricing system if it makes sense for them from a cost-benefit analysis on their part.
But this 10% fund that will emanate from the carbon tax, is there any guarantee that that money will be used to compensate businesses, small businesses, for the real costs that they must incur and can't pass along to their customers? Is there any guarantee in the law?
I think the short answer is that the details of how these provisions, if passed by Parliament, will be used, in relation to small business, small and medium enterprises, and other particularly affected sectors are still under development and really can only be released once the statutory provisions to enable the payments are enacted.
Why?
So as not to prejudge that the authorities will be available to the government.
But details are regularly introduced in budget books, for example, before legislation is passed. So why can't the details be known before this legislation is passed?
I don't think the officials are not in a position to answer that, Mr. Polyev. It's only the minister or the cabinet.
But he hasn't answered it either. So I guess what we're being asked to pass legislation and then find out after we passed what it does.
So I don't think officials can answer on that. That's where we're at. We're at an impasse right there, Mr. Oliphant.
Thank you, Mr. Chair, and thank you to all the officials for being here today. I'm not a member of the Finance Committee. I've not been blessed with that. So it means I come at it rather naively, and as I'm reading this section, I see the intent is to forward the revenue directly to households most affected. And that my assumption is in that formula that was done to get the payments to households through their income tax, that it was factored in that costs would proceed at several levels through the chain of expenses related to a price on pollution. Was that factored in, that if there were costs on various organizations, whether they be large businesses, small businesses, medium-sized businesses, or other enterprises, that was factored in to that part of the 90%?
Thanks for that question. So generally speaking, as with other carbon pollution pricing systems, the expectation is that the costs are passed through, and that's why you see it's fairly common to that proceeds are returned to consumers and households, for example, in different ways in Alberta and BC. What I can say is that the system, and I'm just talking about the overall approach for the design of the federal system, was also designed to take into account that there are industries and sectors that, for various reasons, including international competitors in the market, are more limited in their ability to pass through those costs. And for that reason, we have a separate regulated trading system for those industries so that we mitigate the risks of competitiveness and carbon leakage. But that is the kind of underpinning of the approach, that the price that price signal does get passed through, and that's how the approach works.
That's helpful for me, because I was understanding that it generally passes through because that's the way business works. And for those cases where it's determined that it would most likely not be able to be easily passed through, there is mitigation for that. And then there is other possibilities to use some of the revenue to encourage the whole system, because the whole thing is meant to tackle climate change, not to produce revenue. Am I understanding that?
That's correct. Okay. The intent is not to generate revenue. The intent, and as was indicated in the announcement in October and again in December, the intent is to create an incentive for households to be able to further reduce emissions, and through climate action incentive payments, but also that 10%, roughly 10% that was identified that would be, was proposed to be targeted to the other affected sectors, including SMEs and the municipalities, universities, schools, hospitals, etc. The idea is that those proceeds could also be invested in other ways to reduce, to lower carbon footprint, to improve energy efficiency, foster further innovation, etc.
Thank you. Thanks, Mr. Chair.
Mr. Polyev.
I mean, the whole premise of this 10% fund is that there are some businesses that are going to end up paying more in taxes that they can't pass on to their customers. And yet you can't confirm that small business owners will be reimbursed for costs that they can't pass on. I have a couple of foundation layers who came to see me in my office 2 weeks ago, and they say the extra fuel that is going to be associated with turning the cement and concrete and pouring the foundations and moving their workers, their trucks, and other assets to workplaces cannot all be passed on to their customers. So these two small businessmen who employ, I suspect, about a dozen people are going to have to eat those expenses. The government claims that they shouldn't be worried because 10% of the revenue from the carbon tax will go into this special fund that will help people just like them. I've asked you, can you guarantee that they will get back in rebates or some other compensation as much as they pay in taxes? And so far, I haven't had anyone on this dais tell me that the answer is yes. Can anyone tell me that my two small businessmen from my community will be fully compensated for the tax they will pay as a result of this new carbon levy?
So the proposed provisions are not a new carbon levy. It's really an authority to allow for the return of some of the proceeds that will be collected from the fuel charge at the moment for provinces.
When was that instituted, that fuel charge?
That came into force on April 1st.
Right, and it's now May, so it is a new carbon levy.
Correct.
Yeah.
I was referring really to the provisions that are proposed in BIA. As we've said, in October, the government identified a number of particularly affected sectors, including small and medium enterprises, but there are several others, including municipalities, hospitals, universities, and Indigenous communities, and several others. The government also at that time published estimates of what it believes the proceeds will be, and therefore what the payments using this authority, if passed, what the overall size of those. What has not yet been published, and I think goes to the core of your question, is the specifics of the program design that will support the return of those proceeds to each of those sectors. So I think the only accurate answer at the moment to your question is it's under development.
So when these constituents, these small business people come into my office and say my costs are going up, I have to lay someone off or cut someone's pay. I'll say to them that someday the government's going to announce a program whereby they can fill out a form and maybe staple on their receipts from gas and other expenses that have gone up, and maybe someone in Finance Canada or Environment Canada will reply to them and say, thanks for your letter. We've looked over your expenses, and here's a check.
I would agree that likely the best answer would be that the government is developing the specifics around how the program will be implemented.
Right, and I realize you're in a difficult spot here. You're conveying what's in the legislation, so you're not at all to blame for the situation the government has put you in. But unfortunately, you can appreciate my constituents are the victims of it, and that's why I'm asking these questions.
Okay, can we move, Mr. Oliphant? You want in?
Yeah, I have another concern from the other side of this equation, and it may be I'm seeing glass half full as opposed to glass half empty. Is there any concern that businesses that adapt and reduce energy costs and actually are incentivized to address climate change by reducing their carbon footprint, by reducing their electricity consumption, by reducing all of those things, or by changing the way they do business, And they actually dropped their costs such that, because I know that I don't park downtown in Toronto very often because it's $20, so I take the subway. But if parking was $2, I'd probably drive. So I've adapted my abilities. The businesses in my riding may be different than other ridings, but they're really smart, and they're always cutting costs, and they're always looking for. They're also socially very responsible businesses in Don Valley West. They're attempting very much to address the problem of climate change and pollution. So they're dropping their costs. Is there any guarantee they won't be over-subsidized? Is there any guarantee that that the government won't give them too much money because they've dropped their costs so much?
As was mentioned, that sort of the details are in development, but just generally speaking, reducing emissions and increasing efficiency will lower costs. And so, for a household, for example, that reduced their carbon footprint, they would be receiving that climate action incentive rebate, but there would be more savings. For the regulated trading system for large industry, if their performance exceeds the threshold, they receive surplus credits. So I think, in short, it's to say there is still that price signal and incentive, and in the output-based pricing system, the reward. That's right.
Both programs are incentive.
Right. That's right.
And that socially aware businesses and smart businesses that are going to compete in the 21st century, they'll figure it out. You might not want to comment. Thank you. Thank you, Mr. Chair.
All right, moving.
I'm up still. I have a few more here.
You do. Okay, Mr. Poilievre. I'm surprised.
I know Mr. Oliphant has revealed that his constituents are among the smartest people in the world, and I want to assure him that he should, before rendering that judgment, he should come to the riding of Carleton and visit with the businesses that I represent, who are also very shrewd in how they conduct their affairs. And the problem for them is that it's all stick and no carrot here. Mr. Oliphant is saying, look, if you reduce your emissions, we'll hit you a little less hard with this big stick of ours called the carbon tax. And then he asks people to be grateful for that. What I was asking is, where's the carrot for the small business person? I gave the example. There's two small businessmen from my constituency who lay foundations for some medium-sized commercial and also residential homes. These are the foundations we all take for granted in the buildings that we live in and work in. They are going to pay more. And the government tells them, don't worry, there's this fund that you're paying into. And part of the carbon tax will flow into this fund. It's defined through a very sophisticated algebraic formula. Trust us, you're going to get something back here. Maybe. We can't tell you what, but one day, we will tell you, and maybe you can staple your fuel and other costs onto a letter and send that letter to the minister, and he'll send you some money back.
Point of order over here. I think we are getting into a debate that can happen in House of Commons that officials can't deal with. But your point of order, Mr. Sabera.
Chair, as much as I respect and appreciate folks that build homes and have many in my community, I do want to go back to the topic at hand, which is the BIA legislation, and in reference to what is in the legislation. Thank you, Chair.
Yeah, everything I'm talking about is in the legislation. That's the subject. It's the parts of the legislation you don't want to talk about, Mr. Sabera, but it is in the legislation.
I think it's the principle of the legislation that we're kind of debating at the moment. If we can get into the detail that the officials can answer, maybe that's where we ought to be. I think we are having a great exchange. This is a wonderful exchange. But we really need to get into B to 97 and deal with what the officials can deal with if we could.
Well said. So I suspect that both of your ridings have innovative businesses and committed business owners. And the thing that I think we can comment on is the fact that 100% of the revenues collected will be returned to the jurisdictions of origin. And I don't think we can say that all businesses will be equally affected, as MP Polyev had mentioned, and that will all be able to innovate in the same way. That wouldn't be the expectation of price signals and then returns. And then the funding that isn't returned through the Climate Action Incentive Payments Directive funds would be subject to the programming to which we're alluding, but I don't think we're going to make an announcement on here today in front of this committee, the three officials present.
Okay, can we move on to payments in relation to infrastructure? Who's heading off on that? Mr. Malka.
Makoots. It's all right. Lots of people get it wrong.
So
Thank you,
you pronounce it, so we got it right.
It's Mr. Makoots.
Makoots, okay.
Thank you, Mr. Chair. So I'm here to speak about Clause 130, which is of the bill, which proposes to provide up to $2.2 billion for the purposes of municipal, regional, and First Nations infrastructure. This funding will be delivered primarily through an existing program called the Federal Gas Tax Fund. The Gas Tax Fund is a permanent legislated and indexed funding program. It's been around since 2005. Currently provides approximately $2.2 billion in last year to 3,600 municipalities, communities across the country for the purposes of investments in their local infrastructure. Through the program, funding is provided upfront to provinces and territories who are signatories, and then they flow funds to municipalities. Projects are chosen locally. Municipalities are allowed to choose among a wide variety of investment categories to address the needs as determined by local governments. Generally, in the past few years, the funding supports approximately 4,000 projects per year. And as I said, it's very flexible, not only in terms of the categories, but in terms of how the municipalities can spend the funds. They do not necessarily need to spend it in any given year. They can bank it and to pool it for a larger amount to spend for a larger project if they wish. They can work with other municipalities to work on a regional project. It's a program that's very well appreciated, very well supported by all of our stakeholders, and I will conclude with that.
Mr. McLeod first. Go ahead, Mr. McLeod.
Thank you, Mr. Chair. I just have a couple questions on so I'm clear on how this works. Now, the gas tax fund, has it been historically delivered by Minister of State and it says Indigenous Services here? Which department usually?
So there are two departments that have historically delivered. The way the funds are set out of the $2.2 billion is primarily on a population basis, and there's a portion representing Indigenous people that on reserve that goes to Indigenous Services Canada, and they manage that portion. I'm not privy to the details of how that bit is managed. I'm from Infrastructure Canada. We manage the majority of the funding, which gets delivered to provinces, territories, and then flows to municipalities.
Okay, you've gone to where I really wanted to go, and this is the First Nations funding, because Indian Affairs doesn't have a mandate for First Nations people in the Northwest Territories. They fall under Northern Affairs. So the $18 billion or so that's under Indigenous Services does not come to the North. So when you say First Nations also will get the gas tax, how is that going to work in Northwest Territories? Our Indigenous people do not fall under the NIOs, National Indigenous Organizations. The Land Claims Coalition doesn't get the gas tax. Is it then going to go to the government in Northwest Territories, who is now going to start acting as the new Indian Affairs for us? Or how? What's the delivery mechanism for Northwest Territories First Nations?
So in the territories, historically, since the beginning of the program, the territories have been responsible for managing all of the funding for all of their communities, both Indigenous and not Indigenous, in their area.
I've never heard of, I'm not sure, can you tell me if there's Indigenous people that get the gas tax in Northwest Territories?
There are communities that get the funding.
Okay, that's not what I asked you. Communities, municipalities are not Indigenous First Nations councils.
Yeah, the way in which the territory manages that part of it, we have an agreement with the territory. There's a formula that's outlined in the agreement. I'm not privy to all. I'm not knowledgeable of each of the jurisdictions.
And that's my concern. Yeah. We're giving Indigenous money instead of delivering it to the Indigenous governments. We're giving it to provincial territorials to manage for which is almost like creating an Indian Affairs Department, just smaller in each region.
I understand that's the way the program was designed and approved in 2005, and it's continued in that
But
time since.
it doesn't follow the nation-to-nation concept that we talk about.
So, then the way the gas tax refund works for, say, Northwest Territories is it goes back to the territorial government and they manage it. Is that what you're saying?
The gas tax in Northwest Territories goes to the government of Northwest Territories and provide to municipalities, not to Indigenous governments.
Okay.
And the reason I raise it because it does say First Nations in this clause, which means there's a different standard for the rest of Canada compared to the Northwest Territories. Indigenous people, Indigenous governments don't get it.
Valid point, Michael. I think Mr. Sabaro had a question. Did you, Francesca?
Do we want to? Are we? Does Mr. McLeod wish to?
No,
continue?
he's complete. You're next.
You're well, first off, to my colleague, Mr. McLeod, thank you for raising that point and explaining that to us. I was not aware of that either. A quick question: the $2.2 billion will be distributed to municipalities when?
It's subject to the parliamentary approval of the legislation. Once that is done, then we will be in a position to flow the money to our signatories, which are the provinces and territories, who will then flow it to municipalities as per the terms of their agreements.
Of course, anticipated to be done once the legislation is passed, so effectively this year.
If it is passed, yes, that's our expectation.
And prior to, I would hypothesize prior to the summer construction season. Of course. Yes. For the area I represent in York Region, the city of Vaughan, we'll see it because this effectively doubles the amount of funds received by municipalities, also by regions in Ontario. And in my city, the city that I reside in the area, it'll be effectively an extra $9.18 million that can be used by the city to build infrastructure, pave roads, bridges, and create good jobs. I will leave it at that, Mr. Chair. Thank you.
I have one question. In terms of the gas tax fund, the 2.2 follows as the previous one did. Is stacking allowed?
So under the gas tax fund, a community can use up to 100% of this funding to build a project. There's no cost sharing requirements. They don't have to contribute any of their own funding, nor do the provinces. And it is treated as federal dollars with respect to other programs. So it has other programs that we run in our department. The gas tax fund is treated as federal dollars, so the stacking provisions of those programs apply. But with respect to the gas tax fund, there are no stacking provisions.
Okay, that's good because on bridges and such, that's a problem for some of the very small municipalities or communities. All right, no further questions on payment in relation to infrastructure. Then turning to Federation, thank you very much. I believe Ms. Henry, you're up on Federation of Canadian Municipalities.
Thank you. Actually, Bogdan's going to stay here with me because there's an infrastructure component to this.
I see
So my name's Joyce Henry. I'm the Director General of the Office of Energy Efficiency at Natural Resources Canada, and I'm here to speak to you about the proposal contained in Clause 131 in Division 4, Part 4, that proposes to provide $1.01 billion to the Federation of Canadian Municipalities on energy efficiency improvements for houses and buildings and to improve strategic infrastructure decisions. So the clause is made up of 4 subclauses, and they provide authorization for payments to be made out of the Consolidated Revenue Fund to the Federation of Canadian Municipalities Green Municipal Fund and the Asset Management Fund. They further allow for the Government of Canada to enter into an agreement that establishes the terms and conditions for the use of this funding in those 2 instances. So the Federation of Canadian Municipalities, as I'm sure you're all aware, is a long-standing partner of the federal government to deliver programs on environmental benefits. They're a national voice of municipal governments, and their membership includes more than 2,000 municipalities of all sizes, including urban, rural, and northern communities from coast to coast. The proposal itself, with respect to energy efficiency funding, is for $950 million in additional funds to the Green Municipal Fund, and there's a breakdown within that of $300 million for sustainable, affordable housing innovation, $300 million for community eco-efficiency acceleration to advance home retrofits and innovative financing mechanisms related to that. And then there's a $350 million allotment to fund Low Carbon Cities Canada and to collaborate on community climate action to improve energy efficiency in large buildings. There's also a proposal to provide $60 million in additional funding to support the infrastructure development activities of the Asset Management Fund. So the objective of the Asset Management Fund is, I apologize. The Asset Management Fund is supported by a contribution agreement between the Minister of Infrastructure and Communities and the Federation of Canadian Municipalities. It supports municipal level capacity building for managing assets and improving strategic infrastructure investment decisions. And new investments will contribute to smart infrastructure investments in support of environmentally and financially sustainable communities. With respect to the Green Municipal Fund, it contributes to environmental benefits for Canadians by offering grants and loans for environmental municipal projects in 5 key areas: energy, water, waste, sustainable transportation, and brownfields. And the funding that is proposed through Budget 2019 is meant to focus on advancing energy efficiency in the built environment.
Okay. Any comments or questions here in this section? Ms. Rudd.
Thank you. And the Energy Efficiency Fund was certainly something I was pretty excited to see, and I know that the Federation of Canadian Municipalities have been very engaged on this and have done good work on behalf of the municipalities. I wonder if you could explain a little bit more. You were sort of running through the list there a bit quickly, and I'm not quite sure I got it all. I think it's $350 million that engages the home retrofit program. Can you talk a little bit about what is how you anticipate that home retrofit program working and what indeed it would include?
Sure. So it's actually $300 million for the home retrofit portion, if I can call it that. It's called the Community Eco-Efficiency Acceleration. The details need to be worked out with the Federation of Canadian Municipalities. They are an arm's length organization, although there are federal members, including myself, who sit on the council. So that work is fairly nascent, but will begin soon. The idea, though, is that as municipalities apply under the criteria for grants and loans in this, that then they would be able to make innovative programs with respect to this money for homeowners. And one of the ideas under that is an innovative program, for example, on financing. So it's called the Property Assessed Clean Energy Model, and it allows homeowners to make energy efficiency improvements to their household and then to pay back that over time on their property tax bill. So this actually already exists in Alberta and I think in Nova Scotia as well, and it's been very successful in the United States and in parts of Europe. So that's one example. And then obviously municipalities could, that's one innovative example, but there are others with respect to other energy efficiency ideas that municipalities could put forward an application for.
So that ties into my colleague, Mr. Oliphant's comment about opportunities and ways that Canadians can create energy efficiency in their homes, save money, and still have, and indeed have more money in their pockets from their climate action incentive that they're getting. So that's the behavioral change. And I wasn't aware of the loan system that's happening through the tax system. And what a great opportunity for folks who can't put out what could be a significant amount of money to be able to do it that way. So I hope as you progress in your discussions that that's certainly something that finds its way to the table. Thank you very much.
Mr. Dussault.
Thank you. I have great confidence in the way that the FCM operates and its management, but the only question I have is regard to accountability, because we are being asked today to approve substantial amounts, more than $1 billion. How, over time, will Canadians be able to get details on how these funds have been expended? Is it possible to get details in public accounts, or is it only from the FCM that we can get details on how each dollar has been spent and that we are approving now?
Absolutely. The FCM actually does an annual report each year on their activities under the Green Municipal Fund, and equally they do a report, sort of a forward-looking report on what they intend to use as objectives under the current Green Municipal Fund, and both of those are both publicly available and tabled in Parliament. So I can give a little bit more detail on what criteria is required under them, but it includes very detailed representations on, for example, the financial audit of the fund, which is required, the projects that have been funded, outcomes from that, those sorts of details.
Okay, merci.
Okay, and no further questions on this section? Then I believe, we got stars. The Shock Trauma Air Rescue Service still under Part 4, Division 4. Mr. Joel and Mr. Gallant. Who's up? Mr. Joel?
Oui, tout à fait. Merci.
Yes, thank you, Chair, ladies and gentlemen, members of the committee. Martin Joyal from the Department of Public Safety, and my colleague Benjamin Gallant.
Thank you very much. Sorry, Mr. Joel. Thank you very much for your presentation, folks.
We're here to speak to you about Section 132.1 and 132.2 in those two clauses in the proposed budget bill. What is proposed in those two clauses is to provide the Minister of Public Safety with first the funding, and second the authority to enter into an agreement to flow those funds to the not-for-profit organization named Shock Trauma Air Rescue Service, or STARS for short, which is based in Calgary. And that is to provide that not-for-profit with $65 million for the purchase of, in total, 5 new helicopters. STARS provides a critical emergency service, air ambulance services in Manitoba, Saskatchewan, Alberta, and parts of British Columbia. This is consistent with the ministers responsible for emergency management met in January and approved a new emergency management strategy for Canada. And under that, we are working with provinces and territories and the full community involved in EM to look at where gaps are, or potential imminent gaps are, in our EM posture. And with the aging fleet at STARS, they had undertaken or had started undertaking a sort of a capital raising campaign to renew the fleet, with the funding proposed here in the budget to be provided from the minister to the organization. This would allow the organization to accelerate its renewal process, which it had estimated to take another 10 years to renew the whole fleet. This will significantly increase it and should be in a position to have 100% renewal in the next 3 years. So that is what's proposed here.
Thank you very much. We met with the group when we were doing pre-budget consultations as well and made a recommendation. Ms. Rudd.
Chair, yes, we did. We had an excellent presentation by them, and certainly as an organization that has been around for some time, I was very surprised at their the contributions they receive from organizations, charities, donations, which is really what keeps them going. And this renewal of their fleet was urgent. if I can use that word. So in terms of STARS, majority of their funding does come from non-governmental places, if you will. Is there a provincial territorial contribution to this? And if so, what is that, or are you aware of it?
I could not quote you exact numbers, but yes, most of their the proposed federal contribution here is only for helicopters, so that doesn't speak to operations. Their operations since the 1985, when they established themselves, has been through private, local, community fundraising, as well as they have 3 agreements with one agreement with each province in the prairie, so Manitoba, Saskatchewan, and Alberta. They have operational agreements so that they integrate their operations, and through that they get another amount of funding to support operations, and also to sort of exactly better integrate their operation center with the provincial operation center, so that the sort of the deployments are done in an integrated fashion. So that's how they generate sort of revenue to support the operational side of it. And as part of that as well, it's our understanding from STARS that with the federal contribution, or for the federal grant rather, to provide for 5 new helicopters, Alberta and Saskatchewan have also come to the table, and I think Saskatchewan has made a public announcement about this, but they have also come forward to provide the funds for an helicopter each, so that's also contributing to the full renewal.
Excellent. So it actually ended up, the federal contribution actually ended up creating more than originally thought by the provinces coming in.
All of this is contributing to the fleet renewal, yes.
Thank you.
Okay, thank you. Any further questions there? Then thank you, gentlemen. And we'll turn to Part 4, Division 5, Enhancing Retirement Security. All right, I'm not sure who is heading up this. You, Mr. Shan? We have Mr. Shan, Mr. Patterson, Ms. Rye, and Mr. Cantor. Welcome.
Merci encore, Monsieur le Président.
Thank you once again, Chair.
En réponse aux préoccupations.
In response to concerns about retirement security in the context of some corporate insolvencies, the government committed in Budget 2018 to undertake a whole-of-government evidence-based approach to enhancing retirement security for Canadians. Consultations took place in late 2018 with workers, pensioners, companies, and the public, and this resulted in more than 4,400 online submissions, in addition to formal written submissions from stakeholder groups on this important issue. As a result of this work, the government is proposing legislative amendments to federal insolvency legislation, corporate governance, and pension statutes. These amendments will enhance retirement security while continuing to support Canada's marketplace framework laws as strong platforms for economic growth, innovation, and jobs for Canadians.
So briefly describe what Division 5 of Part 4 amends, and it amends a number of statutes. So first, it amends the Bankruptcy and Insolvency Act to, 1, clarify that the duty of good faith applies to all parties in proceedings, giving courts another tool to ensure that parties act honestly, reasonably, and candidly. It provides courts with further powers to address executive payments made before an insolvency, where appropriate, deterring executives from taking actions contrary to the interests of employees and pensioners. And 3, it exempts registered disability savings plans from seizure by creditors in bankruptcy proceedings, providing assurance that the funds in these accounts are safe. Division 5 of Part 4 also amends the Companies Creditors Arrangements Act, and it does so in 3 key ways. First, to limit the scope of initial court orders and interim financing, lessening the chances of extraordinary relief, such as suspension of pension contributions, being granted at the outset, and giving courts more time to hear all parties' views before making more consequential orders. 2, it requires creditors to disclose their real economic interests in proceedings, if required by courts, helping to preserve fairness in insolvency negotiations by rectifying informational imbalances amongst the parties. And 3, in line with the Bankruptcy and Insolvency Act change, clarifying that the duty of good faith applies to all parties. Division 5 of Part 4 also amends the Canada Business Corporations Act to 1, require publicly traded corporations to report on policies that pertain to workers' and pensioners' interests and the recovery of certain incentive-based compensation, providing more market oversight and encouraging conversations about factors impacting corporate strategy and decision-making processes. 2, it would clarify that corporate directors may consider employee and pensioner interests, among others, in their decision-making, encouraging directors to take a more comprehensive approach to assessing the long-term interests of the company. And 3, it would require publicly traded corporations to hold non-binding shareholder advisory votes on executive compensation, facilitating conversations about more balanced executive compensation schemes in certain cases. Finally, there are changes to the Pension Benefit Standards Act 1985, which my colleagues from Finance will detail.
Thank you. So Division 5, Part 4 also amends the Pension Benefit Standards Act 1985 in 2 ways. The first, it clarifies that a plan member's entitlement to their pension benefits cannot be made conditional on the continued operation of the plan. In other words, it clarifies that members are entitled to the same pension benefits on plan termination as when the plan is ongoing, and this clarification is in order to ensure that employers fund all benefits properly. And second, it also amends the PBSA to permit defined benefit pension plan administrators that purchase annuities from a regulated life insurance company to transfer their obligation under the plan to provide retirees and other beneficiaries with a pension to the regulated life insurance company, subject to certain conditions. This will help increase the benefit security of retirees for whom they are purchased, as those retirees' pensions would now be provided by a life insurance company. So the retirees are no longer subject to the risk of employer insolvency, and it also helps to improve the sustainability of defined benefit plans by allowing them to de-risk. Thank you.
How will these changes affect the benefits, the pension benefits paid to employees of newly bankrupt companies whose pension funds are inadequate to fulfill obligations?
Thank you for the question, Mr. Chair. The situation you describe is an unfunded pension liability. So this is when there's a portion of the pension that is insufficient in terms of the amount that's held in reserve, which is sacrosanct. So I'll just make 2 distinctions. So pension plans are regulated both provincially and federally, and there's different standards to which companies are required to hold funds.
When you have an unfunded liability after bankruptcy, I'm aware of all of the regulations that exist beforehand, but I'm now talking about after a bankruptcy occurs. What impact will these changes have on unfunded pension liabilities?
So twofold. One, there's a certain amount of preventative measures. So I know you're speaking about what happens in an insolvency. So if the situation is what it is right now, then the change that most affects that would be the change related to first day issuance orders and duties of good faith. Insofar as that will allow for retirees and pensioners to be participants in the process at an earlier stage, because essentially what the first day issuance order change makes is ensures that only those essential orders are done at the first time. So those unfunded pension liabilities those pensioners would be unsecured creditors to the bankruptcy and insolvency, either under CCAA or under BEIA, and this will allow them to be more aptly represented in that process as the restructuring and the negotiation of the insolvency continues. And the duties of good faith are also important ones in that this will actually ensure that those obligations that are now being placed on everyone who's party to the insolvency, that there's best interests that are being maintained. And then thirdly, the economic proceedings is also an important one, particularly in the restructuring side. So if it's a pure insolvency and it's a liquidation, that's another matter. But if it's actually proceeding to insolvency under the possibility of a restructuring, that capacity to be able to know exactly who you're at the table with and have full understanding of the other economic actors that are party to the restructuring is another zone. The vast majority of these changes, though, are focused on the preventative side,
right?
Aimed at trying to prevent this situation.
And I did hear you mention, I think it was for the Pension Standards Act, amendments, I think it was with Ms. Rye, amendments that guarantee the right of the pensioner to his or her defined benefit even after the termination of the pension plan. Did I quote you properly? And if not, please feel free to correct me.
Certainly. As I said, this is a clarifying amendment. There has been a suggestion that our legislation was unclear with respect to benefit entitlement at the termination of a plan. So this is clarifying the intent, which is that your entitlement or a individual's entitlement to their pension benefit is the same when the plan is ongoing as when it is terminated. It doesn't necessarily speak to what the funding in the plan is and how much they may get in an insolvency situation, but their entitlement is the same in all aspects when the plan is ongoing or when it is wound up.
And when you say wound up, you typically mean the fund that the plan is converted into annuity, right?
Yes. Typically for a defined benefit plan, all of the people would receive an annuity.
Right. So basically, they take the pension, the orphaned pension fund, they give it to a supervisor. OSFI hands it to a supervisor, which converts it into an annuity, and we pay, and that annuity pays out the pensioner. But if there's not enough money in the fund to buy an annuity that meets the obligation that the plan offered, what happens?
Well, that's where it would turn to the insolvency statutes. All we are clarifying is that your entitlement to your benefit does not change.
So it has two material changes. So the amount that you would be an unsecured creditor for would be the full amount. So it's clear what you were eligible for when the plan was living is what you're entitled to when the plan is winding up. And similarly, so that would be the determination of what amount you're holding in the bankruptcy as the bankruptcy proceeds.
But as you're almost like an unsecured creditor at that point.
An unfunded pension liability is an unsecured creditor.
Right. And there's a lot of debate going on right now, and I'm not going to ask you to comment or offer an opinion, but I just want to clarify the status quo. Many are suggesting that pensions should be moved ahead of other creditors in the case of insolvency and bankruptcy. At present, can you please describe the priority of payout to creditors in the event of a liquidated insolvency or bankruptcy?
Yes. So there's a relatively small number of layers to the priority system. So the first priority goes to what some people call super priorities. So there are a very limited number of super priorities that already exist. In part because the goal of the super priority is essentially to pay out folks for whom there was almost no other economic option for them to be able to render back what was theirs. So the super priorities right now are for wages, and so there's one that relates to essentially a back pay kind of super priority for up to $3,000 $2,000 of lost wages. As well, there's a super priority on any outstanding payroll deductions, so EI and CPP essentially. So if your employer had failed to pay the CPP and EI on your last paycheck, those payments go forward. So that's super priority essentially, limited number.
And that's the only. Is that the only example of a super priority? Just wages and EI CPP deductions?
Yes.
Okay.
And then you move to a preferred claim. So there's then a preferred claim. There's not many preferred claims, but one of the preferred claims is to the trustee, so the actual monitor. So one of the views is that you need someone to be able to take on the work of actually managing through an insolvency and getting parties to work out the arrangements. And so the monitor is paid as a preferred creditor. The third is then secured creditors, so those who have lent on the basis of a security against the estate and the assets, and so they then get paid. And then there's unsecured creditors, who are a whole range of people. So anybody who essentially has an account on pay, which would include unfunded pension liabilities. There would also be any unpaid benefits, as well as any of the suppliers and contractors who might have been party to the process. Mostly, which often includes a significant amount of small and medium sized enterprises. And then finally, if there's any money left after those have been paid out, then it's shareholders. But by definition, the shareholders are almost never paid, because by definition, if you had money left to pay all of your debts and all of your secured claims and your unsecured claims, and still had money to return to your shareholders, you wouldn't be an insolvent.
Sorry, can you give me the name of the last category again?
Shareholders.
Oh, you said shareholders. So we've got super priority, secured.
Super priority, preferred, secured, unsecured, shareholders.
Okay. And sorry, just one last question. If the unsecured pensions were given super priority, would that potentially put pensions in competition with wages, unpaid wages, in the event of an insolvency?
So the way the insolvency system works is it has a number of objectives. One of them is to prevent what we call a race to the courthouse. So it tries to have an orderly mechanism to ensure that nobody can essentially call their loan or other mechanisms to be able to prevent to get paid at the expense of others. And so to the other kind of element of that is that like gets treated like. So essentially, there's usually a pro rata distribution across the entirety of a category. So all unsecured creditors, for instance, normally get a pro rata proportion of what's left at that point. Super priority would largely be the same. So if you had a very significant call on the initial estate, and we should be clear that there are lots of examples where that's been the case, particularly when there's been provincially regulated pensions that have had significant unfunded pension liabilities. There may not be enough money to actually get through stage one, right. Which to our mind also has a significant knock-on effect in terms of preventing restructurings.
And finally, do you see that there is a moral hazard in the present system where management commits the company somewhere far down the road to pension obligations that present management is not going to have to fulfill, and leaves that problem for some other president or CEO to encounter, and says, things are going great around here. I'm making a huge profit. My workers are really happy with me, without revealing the fact that he has made these commitments to the company that down the road some other CEO is going to have to inherit. Do you not think that if you gave more priority to pensions in the event of insolvency, that present day lenders, those bondholders who are considering lending money to the company might force the company to have a better funded pension?
So to answer that question in two ways. First, I think it's important to look at the relationship between pension solvency rules and insolvencies. So I won't trump my finance colleagues, but just to state what our approach is federally, which is that we have extremely stringent pension funding solvency rules to prevent exactly that moral hazard. So we actually require federally regulated pensions to be funded 100% on a wind-up basis, which means that there actually is enough money in the kitty should the entity go insolvent to be able to pay out their requirements. That's not the case in all provincially regulated pensions. So that's one way that we deal with that.
They all those provincial, we can say, oh, that's provincial jurisdiction, but when we fall into bankruptcy and insolvency, and then it becomes federal.
That's right. And so we prevent that moral hazard. The second part of your question, though, is I think if you were to start that on a brand new basis, if I was starting a brand new pension tomorrow, I think you're potentially right that the economic incentive to a lender would be to ensure that pension was extremely well funded. But we're actually not starting it at tabula rasa. We're actually starting at funds that already have unfunded pension liabilities, and they're in sectors and they're in parts of the country that are particularly hard hit. And so what ends up, the fear that we have, what ends up happening is instead of creating great behavior around pension funding, even beyond what provincial regulators do, is actually that calls a cavalcade of calls on loans, and that we actually push these firms into insolvency and liquidation quicker, and that people jimmy around with their loans to ensure that they get paid, which is exactly what the insolvency system aims to prevent.
We'd better move on to Mr. Dussault. It's great information. We're moving a little off the bill, I would suggest, but it is great information for us to have. Anybody who might want to do a private.
You should never have let me have the chair. That was your first mistake.
I knew that before I left. Mr. Dussault.
Merci, Monsieur le Président.
Thank you, Chair. For your information, there was a private member's bill by a colleague, one of mine, that was defeated in order to change the order of priority of the creditors, in fact. And perhaps I should state right off the bat that that comment, but my question is the consultations. The consultations that you mentioned. What are the results of those consultations, particularly with regard to the number of individuals consulted who asked for the order of creditors, the order of priority of creditors to be changed? Was this part of the request that you received, or was this not so significant? Yes. The government has had a lot of responses, over 4,000, to those consultations. A lot of responses came in online. There were many form letters sent by organizations that encourage their members to respond to these consultations. Many people said that a change in the order of priority would be important, and others indicated that this change would not benefit in the case of an insolvency. So there is a disagreement. The purpose of the consultation was not to find out how many for and against, but rather to consider all aspects of the consultations and all the arguments that were presented by those individuals and organizations. I understand, but perhaps a large majority of those respondents asked for something, and today we have a bill that does not do what many of them would have asked for, and that is why I would say I'm disappointed with this bill.
because it does not meet one of the main requests made by people in this area. It was quite specific, and which would have been possible and simple. So perhaps that is my preamble, Mr. Chair. Otherwise, if I have some time, I could ask some technical questions with regard to the bill, the substance of the bill in clause 172.2 and the well-being of employees, retirees, pensioners. Perhaps you could define what you mean by information related to well-being of employees, retirees, and pensioners, because here we're talking about information concerning this well-being, but it's not clear for me what this refers to.
Oui, le process normal.
Yes, the normal process is the same as for other things set out in the bill. Normally there are categories where the company must provide information for the company every year, and it's very specific. There was another bill on this, and there was a requirement under the regulations to give this kind of information. And it's the same thing here. So most of the information will be set out in the regulations.
Okay, puis,
Okay, and my other question is a little bit further down, concerns the approach to remuneration that must be selected and defined by regulations. There are different approaches that could be selected by shareholders at a vote. Could you explain how this mechanism might work? What will be the approaches, the different approaches? Approach is quite broad. So what do you mean by approach on remuneration? An approach in this bill, I would say it's important to have a definition because there are many aspects to compensation. It includes wages, but it also includes benefits and other aspects. And this will allow the directors of a board to describe their approach, and the approach doesn't include every aspect, but the directors themselves would define the approach. So it's the Board of Administration that would define their approach. Yes. Well, there is an approach, and now it is important to have a standard in terms of compensation approach that includes wages and other things like that.
La question de la...
With regard to good faith, this is another subject. The obligation.
Any more questions on this point? You do?
Ouais.
Okay.
Yes, I do.
It is 2 o'clock, so we will have to adjourn, and we'll have to start where we left off here on Monday. It looks like we'll have to start Monday at 3:30 and go probably till we finish with officials, which could be 9 at night. Hard stop at 9. Start at 3:30. Hard stop at 9. So that's where we'll be at, and if we don't finish by 9, we'll have to consider other alternatives. Okay, with that, thank you everyone, and thank you witnesses. You will have to come back again. Meeting adjourned.